Investing in mid-cap stocks can be an attractive option for various reasons. Firstly, mid-cap companies are typically more established than small-cap companies, providing a level of stability for investors. Additionally, mid-cap companies tend to be less risky and more stable than small-cap companies, making them an ideal choice for investors looking for a balance between return and risk. Another benefit of investing in mid-cap stocks is that they can provide diversification for an investment portfolio, as they often operate in different industries. Mid-cap companies may also be undervalued compared to large-cap companies, providing investors with an opportunity to buy stocks at a lower price, and potentially generate higher returns. Furthermore, institutional investors may overlook mid-cap companies, offering individual investors an opportunity to invest in companies that have less competition, and may generate higher returns. To start this video, the first stock on our list is household and personal products leader e.l.f. Beauty Incorporated, which trades on NYSE under ticker symbol e.l.f. Specifically, the company operates in the makeup, skincare, and personal care segments of the beauty and personal care industry. There are several channels through which e.l.f. Beauty sells its products, including online, in retail stores, and through partnerships with other retailers. e.l.f. Beauty has grown steadily since 2015, with revenues increasing from $78.3 million to $448.2 million. In terms of net sales, the company grew by 33% to $122.3 million, primarily driven by strong performance in the retail and e-commerce channels. A GAAP-based analysis showed net income of $11.7 million, and diluted earnings per share of 21 cents. The company's adjusted EBITDA grew 47% year-over-year, to $27.3 million or 22% of net sales. e.l.f. recently released its first ever impact report for fiscal year 2022, detailing the company's environmental, social, and governance initiatives and accomplishments. The report highlights the company's commitment to diversity, with a board and employee base that is representative of the young, diverse communities they serve. e.l.f. was also recognized by Fortune as one of the best workplaces in 2021, with high employee engagement and recommendation rates. Additionally, the company supports and empowers underserved communities, through partnerships and charitable donations. The company has expanded its distribution channels and product offerings, indicating continued growth for e.l.f. Beauty. All of these factors suggest that e.l.f. has long-term investment potential. Number 2 on our list is Nasdaq-listed Immunovant Inc, which trades under the ticker IMVT. As part of its research into autoimmune diseases, Immunovant has developed monoclonal antibodies. In order for these therapies to be effective, clinical trials will have to demonstrate that they are capable of treating the targeted conditions. Providing new treatment options for patients, with limited options for autoimmune disorders would be a great benefit, if these treatments are successful. IMVT's recent financial results show a significant increase in research and development expenses, with a figure of $37.7 million for third quarter of 2022, compared to $21.4 million for the same quarter in 2021. Additionally, general and administrative expenses decreased from $16.3 million in third quarter of 2021 to $11.9 million in corresponding quarter 2022. A rise in the expenses incurred on Immunovant's myasthenia gravis trial and thyroid eye disease trial, for which results are anticipated in second half of 2024 and first half of 2025 respectively. This increased expenditure is aimed at ensuring positive results in both trials, which could have beneficial long-term effects on Immunovant's growth. However, Immunovant's shareholders have seen significant growth over the past year, with a 140% increase in share price. On October 6, 2022, the company successfully raised $70 million through an underwritten offering of common stock. This cash injection brought Immunovant's pro forma cash and cash equivalents to approximately $476 million as of September 30, 2022, extending the company's runway into the second half of 2025. These factors highlight Immunovant's long-term potential for growth, leading us to include the stock in our list. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Third stock on our list is Comprehensive Space Solutions Maxar Technologies Inc., which trades on NYSE under ticker MAXR. Maxar Technologies is a company that provides advanced technology solutions for a range of industries, including defense, intelligence, and civil government. The company's capabilities include Earth intelligence, space infrastructure, and protection. National Geospatial Intelligence Agency, commonly known as NGA, has awarded Maxar Technologies a contract to the tune of $35.8 million. As part of the contract, 2 awards will be made. One for $22.5 million for the 1-year period of performance, which will be used to provide high-resolution land cover data to NGA, under the Janus Geography Program. The other award is for $13.3 million for a modern, enhanced API that can be used to query, discover, and download Maxar products from 125 petabytes of commercial imagery, archived by NGA for its foundation program. MAXR recently generated revenue of $436 million for the quarter, which represents a slight decrease compared to the same period in the previous year, when it generated $437 million. Operating income rose to $43 million, from $37 million in the reported quarter, whereas its total assets increased by $559 million, to $4.557 billion. Maxar has entered into a merger agreement with Advent International, a leading private equity investor, for an all-cash deal valued at approximately $6.4 billion. As the demand for satellite-based services continues to rise, Maxar is well positioned for future growth, and has been added to our list of long-term growth companies. Nasdaq-listed Axsome Therapeutics Inc., which trades under the ticker AXSM, is the next stock that successfully made it into our list. Axsome Therapeutics develops treatments for central nervous system disorders. Its lead candidate, AXS-05, is currently being studied to treat major depressive disorder, Alzheimer's disease agitation, and depression resistant to treatment in multiple clinical trials. AXS-06, another product candidate, is being evaluated for treating osteoarthritis pain and insomnia. According to the results of the Accord Phase 3 study, AXS-05 met both primary and secondary endpoints, including a substantial and statistically significant delay in the time to relapse and a prevention of agitation relapses when compared with placebo, both of which were achieved. Looking into its financials reveals that the company generated total revenues of $16.8 million for third quarter of 2022, as well as cash and cash equivalents of $227.5 million, which indicates the company is in a sound financial position. AXSM believes that their current cash position and remaining committed capital will be sufficient to fund their operations well into 2025. Axsome Therapeutics has reported rapid, substantial, and durable improvements in cognitive and physical function with Auvelity, in an open-label trial for major depressive disorder. Auvelity is a cutting-edge, oral medication by AXSM, that targets NMDA receptors and has multiple benefits. Researchers presented these results last month, at the American College of Neuropsychopharmacology 2022 annual meeting in Phoenix, Arizona. The improvements seen with Auvelity suggest that it could be a powerful treatment option to reduce disability associated with major depressive disorder. Due to the potential of their product candidates, AXSM is a valuable investment opportunity, and has been added to our list of stocks to keep an eye on. As final stock in our list, we will highlight Enbridge Inc, a Canadian energy company that trades on the NYSE under the ticker ENB. Enbridge operates pipelines for the transportation of oil and natural gas. ENB's potential for growth and profitability depends on a variety of factors. Those include the demand for oil and natural gas, the price of these commodities, and the company's ability to execute on its business plan and expansion projects. Enbridge recently completed an offshore project in France through its subsidiary, to arrive at its first commercial-scale offshore wind project in France. This also marks a step forward towards its goal of becoming a leader of the global energy transition. As a result of strong customer demand, Enbridge is also expanding its British Columbia gas pipeline system in the southern sector, for $2.65 billion. The company's third quarter GAAP earnings of $1.3 billion exceeded the previous year's third quarter GAAP earnings of $0.7 billion. Additionally, the company's adjusted earnings of $1.4 billion were also higher than the previous year's adjusted earnings of $1.2 billion. ENB plans to renew its program for repurchasing outstanding common shares, allowing for the repurchase of up to $1.5 billion of shares in 2023, under its normal course issuer bid. Enbridge is a well-established company with a strong track record of performance, and it is likely to continue to be a major player in the energy industry in the coming years. And all these factors put the stock in our list for investors to keep an eye on for long-term growth potential. We hope you find this video helpful in assessing and adjusting your investment portfolio for the longer term. Let us know what you think in the comments section. Don't forget to check out our website, stockstelegraph.com, for more stock tips.